This conference will now be recorded.
Good morning. Welcome to WinCAMS webinar number 4. Our focus today is reimbursable project billing. So the project is pretty much a catch-all. Oftentimes it's actually a project, like something that you're working on, maybe a pothole patching on a given road, or we have solid waste clients that have a project for each of their landfill sites. You could have a project for tracking costs to a specific grant. So projects can be set up in a number of different ways based on who's paying for it, what you're doing. It's just a convenient separator of costs. And then sometimes we want to know those costs simply for the sake of knowing the costs, right? For no other reason. And other times we want to know these costs for so we can then bill them to another agency in your area or your city or your county, or to a developer, or for permit costs, or for something like that, or for sometimes a developer develops a tract of homes or something like that, and then the department, the agency goes out and surveys or inspects or things like that. It really could be anything. There's no rules about it at all. So this is a basic outline that I made about what we're going to talk about today. So the first thing I'm going to do is set up a reimbursable project. I'm going to try to walk through this process in real time and do every step of the way. So there's going to be some redundancy, like we're going to actually enter a time card and things like that to get those charges in there. But I want to be able to start from scratch. But I want it to be really clear. You notice here it says maybe done after section 2. So a lot of times people say, oh yeah, I'd love to set up, now that it's time to bill, I wish WinCAMS could do that billing for me. But I've already posted all of my charges to the project, so they think it's too late. It is not too late. You can take an existing project that has 5 charges, 500 charges, whatever, and decide after the fact that it is reimbursable, and then we will pick up those charges for reimbursement in the normal course of things. So if you have so this happens fairly often, I think. You have a project that you're working on, like a rock slide or a landslide over a road, let's say, or I don't know, something happened, and then it or you have some damage to a building or to a shelter at the park or whatever you manage, and you are fixing that, and then after you've been fixing it or after you've been working on it, you realize that it is now going to become reimbursable. You received a grant, or you got approval from FEMA, or you simply got an insurance, the insurance company says they'll take care of it or something, and so that's okay. Right? So we keep track of every charge to that project, and we know whether it has been billed or not. So if you have $10,000 worth of charges to a project, and then you decide that it's reimbursable and you go through section 1 that we're going to go through, then that's fine. You take an existing project and you make it reimbursable, and then when you run your project reimbursable billing, we can go back into the past and pick up unbilled charges for billing. Okay. So the first thing we're going to do is set up a reimbursable project, and we're going to work on start with the check boxes on the reimbursable tab. So I'm going to get rid of this, and there's my granddaughter Blair. Another one's on the way, a boy, in January. Exciting. So the project ledger, sorry, Blair. The project ledger is here. We can access it from either Masters, Project Ledger, or CAMS, Projects, Project Ledger, okay? Sometimes people get confused with the Master Project Ledger. The Master Project Ledger is a group of projects. So you can set up a Master Project Ledger called all of our snowplow routes, or you can set up a Master Project Ledger called all of our ADA compatibility or compliance projects at all of our buildings, whatever you want to do. And then that allows you to select on that master project in a report. It allows you to go to that master project and see the sum totals of the charges, etc. But we're going to be working in the project ledger today. Okay, so the first thing to do, you can take an existing project and do this if you want to. I'm going to create a new project. Okay. So I hit plus. I'm going to call this webinar for this particular client is set to not allow special characters like dashes. So I can't put in a dash, but I will put in, I'll make it webinar for AR. Okay. So I save it and I say webinar for project billing an AR client. Okay, so now I might put in a project category, I might put in a project type. There are good reasons to do that, but most of the rest of this stuff is informational. One thing to be aware of is these copy forward options. So this says, should this project persist into the new year when you get to year end? And this one says, should the totals go into the prior year total? So when we look at the financial tab, should we start over or should we, I mean, obviously the current year is going to start over, but should we carry forward the prior year totals for like, is this a long-term project or not? Or do we just want to clear it out and start again? And then if we make it a capital project, we can get into the funding sources and all that stuff, which I don't intend to talk about today. Okay, what I do intend to talk about today is the Reimbursables tab. Okay, so on the Reimbursables tab, if you don't check and set this project to reimbursable, then let me make a note here. If you, then that's fine. And we did this to not confuse you, because what happens when I check this box is a whole bunch of stuff. Okay, so it's going to bring up a lot of reimbursable settings, and it's just not necessary. If you're doing a project that is owned by your department, that is paid for by your department, you just don't need any of this. You don't need to do this. This is not important to you. It's fine. But if someone else is paying for it, or someone else is paying for part of it, or someone else is responsible for it, or you just want to, I don't know, you have some people have some funny, bill themselves kind of ideas, or bill different funds within their own area, especially in Washington, that's common, then they can do that. Okay, so I make it reimbursable, which brings up all these tabs, and I'm going to go through them. The first thing we're going to talk about is these checkboxes. So the main thing is the AR status. So just because it's reimbursable, I can now report on it. I can select on it I can select on reimbursable projects in like a time card report. I can obviously select on reimbursable projects in all the project reports, things like that. So that's got use, and some people say that's good enough for me. I'm going to mark it reimbursable so I can find it very easily, and I can get a report, and then I give that report to my finance department, and they do some billing mumbo jumbo for me. That is completely fine. So that would be, it's reimbursable, but my AR status is manual. Okay, so what I'm going to do is I'm going to change my AR status to automatic. That just means, yes, I want CAMS to bill it. Now, automatic is a charged word. it's not truly automatic. I'm going to actually have to run something to say, what are you going to bill? And I'm going to have to tell it to bill. But what I mean is, will WinCAMS bill it? Okay, so I'm going to change that to automatic. Billing frequency, we have weekly, monthly, quarterly, semi-annual, annual. However, remember, it's not automatic. So it's not like if I set it to weekly, all of a sudden, you know, like people are going to be getting bills without my knowledge, right? So if I set the billing frequency, all that means is I can now select on those billing frequencies when I get to my billing, right? So I can say, obviously I want reimbursable projects, that's not a choice, and obviously I want automatic reimbursement option, the projects that are marked for automatic, but I only, like in this run, I only want to do my annual billings, right? And or in that other run, I want to do my monthly billings, and so then it can sequester different projects for you. Okay, I'm just going to keep it simple with a single client here. Okay, and I'll make this a monthly billing frequency if I want to use that. You don't have to use that. Most people, they just go once per month or however long they wait, and they just say, bill everything that's not billed. Everything that I've set up for billing, if it hasn't been billed before, then bill it, okay? This is a critical checkbox right here, combined journal and AR invoice, okay? So WinCAMS automated billing can bill in two ways. One is, or can result in two types of bills. One is an AR invoice, which will then literally create an AR invoice in your AR module. A few of you do not have our AR module. If that's true, contact me and I can give you a demo of it and we can talk about adding it to your system. Now, if you don't see it in your menus, that could be because you don't have authority to see it, and you may want to talk to your WinCAMS admin, okay? But if you don't have it, I can certainly, we can turn it on for you and show you what it does. But so we create an AR invoice, and then we're going to get to the point where you notify your clients that they owe you, and then they're going to pay you, I hope, and then you enter an AR payment or cash receipt and an AR payment and pay that invoice, and when you pay that invoice, it will bring revenue back to this project. The other way is more aimed at internal other agencies within your municipality or county, which so you're doing work for each other, right? And so in many cases, you then want a journal, and the journal will create a journal in the WinCAMS direct charges module, and then that journal will simply say, move the money from their budget to my budget and bring the revenue back to my project. And so it works the same way. It's totally up to you. In my experience, it's really state oriented. California is very journal happy, and Washington likes to use AR invoices even if they are referencing a family member or a neighboring department, right? That's in the same county. So okay, so back to combined journal and AR invoice. What this says is, are there if there are other projects that have the same AR client or are billing the same budget, right? So if I'm billing, say, the sheriff's office, and or I'm billing Joe Citizen, right? Are there other projects that would, if they were billing the same party, could I put them on the same journal or invoice? Totally up to you. If you do not check this, then then this project will get its own invoice or journal, period, when you do a billing. And if you check this, then if you happen to have another project that references the same AR client or the same billable party, then we will combine the charges for those 2 projects or 5 projects onto one invoice or journal. Okay, so here I'm going to put in my description for the journal webinar for AR charges. I can put in more if I want. You know, this is basically thinking about what is your client or customer going to see? Okay. Okay, next I want to, we've got labor rate options. So a big stumbling block for a lot of people in their billing is they say, well, this is, WinCAMS is my cost accounting system. So I have figured out, I've taken great pains to figure out that Ayren makes $20 an hour and his fringes are this, and he gets this much time off, and et cetera, et cetera. And so his weighted labor rate is $35 an hour, let's say. And so that's really valuable to me. And that's what posts when I post charges to this project, right? And I like that, but that has nothing to do with what I want to bill somebody. Okay, so we see this in our fleet billing, we see this in our facilities billing, we see this in our, and we certainly see it in our project billing. So that's okay, right? And you do not need to co-opt your rate structure to try to make this work, right? That's what I see that with some regularity, where people go into, say, Ayren's job class, and because they want to bill me out at $70 an hour, they change my labor rate to $70 an hour, which then makes my time card look like $70 an hour, which works, but it also makes the cost to the project look like $70 an hour, which I don't want, right? I want the cost to the project for my labor to be $35 an hour, because that's what I've figured out. And then what I bill for it is a completely different story, okay? So going back to our options here, labor rate options. Oh, I skipped one thing, non-reimbursable activities. I don't know why I put it up in that upper section, but this tab right here is non-reimbursable activities. So this allows you to say, exclude these activities from billing, right? Because that's the other thing people say, is they say, well, yeah, I want to bill for this project, but I only want to bill certain things. And there are certain, this is a little bit like our funding sources stuff, but it's basically sort of saying, well, our grant will only pay for preliminary engineering between this date and that date. Okay, great. So then you list your preliminary engineering activities, and then you say they end on this date, right? And then you, or I take it back. you can exclude them from billing starting on this date and ending on this date. Now, another important thing to think about here is whether you even want people to be able to charge those activities to this project, right? So if the rules of whomever I'm billing for this, if they say I won't pay for that type of activity until this date or ever, right? Well, then do you want the time cards to even allow that activity at all for this project? And if you don't, then you can go to the Rules tab and the Activities tab. And if you start listing activities here with effective dates and suspend dates, then those are the only activities you can use on this project. And you have the same option in the project category or the project type, okay? So if you really wanted to go to town on this, what you could do is you could go to a project category, and you could say, like, you know, have a project category for projects reimbursed by the, I don't know, let's say I'm a health department, the smoking cessation grant. So we have 3 projects around our area where we're going out and doing outreach and doing smoking cessation classes, or whatever, prenatal awareness, whatever this grant will pay for. Well, but this grant is very specific that they will only pay for certain activities. They will not pay for driving, and they will not pay for paperwork, and they will not pay for X, Y, and Z. Well, then you have a choice. You can either make these reimbursable projects, you can set up non-reimbursable activities. So that means it's okay to charge to this project for driving, but we know that they aren't going to get billed. Or you can say, hey, guys, we don't want to charge our time in this way because we don't want to be stuck with some of the costs. We don't want to bill for these, or we want to be able to bill for all the project. So then we can say, okay, we're gonna we're going to forget reimbursement. We're going to go to the rules tab, and we're going to say you can only charge these types of activities to this project. Or if you have multiple projects, you can create a project category or project type, and you have the same grid in there, and we can only charge these types of activities to this project, and then we don't get stuck with a bunch of costs that are not reimbursable. Okay. So it's up to you. Now, it's also fine if you don't want to, if you want to just leave it wide open, and then now some people say everything is billable. Okay, back to my reimbursables tab and my settings. So my billing rate options. These are really important. If I say none, then that means just bill at actuals, right? If an invoice comes in, well, invoices are pretty much going to be billed at actuals, but if it's really, we're talking about labor. So if I have calculated a labor rate, Ayren makes $20 an hour, and his applied weighted labor rate is $35 an hour. I just choose none, and I'm done. And it means that if I work 1 hour, it charges $35 on the cost side, and it charges and it bills $35, and the revenue will come back at $35 when it gets paid off. Simple, easy as pie. Okay, what other options do we have? We have standard division billing rates, which suppresses overhead and bills at a standard rate for the division. So that means anybody in a given division will bill at $50 an hour or whatever. So we get the benefit of, we still get $35 of charges to the project, but we bill out at 50. Okay. Job classification billing rates also excludes overhead charges, right? So then we suppress the overhead charges, and then we massage the labor to a job classification rate. And when you choose that, you have two options here, internal and external. Okay, and in the job class, so that what that means, it's a little more complex and versatile than the division billing rate. So if I go into the job classifications, I have grids that allow me to say for a particular job class, for surveyor, let me get to the current only. Okay. For county surveyors, I could set up an external billing rate or an internal billing rate, or both, right? So then when any person who's in job class county surveyor works on this project, and I select internal rates, let's say that's a rate that I choose for my friends at the neighboring department, then I will bill them at this rate. So it doesn't matter what step they're at, right? So I can have a different rate for surveyors, different rate for engineers, different rate for maintenance technicians, whatever you have, okay? Road crews, any doesn't matter. Nurses, if you're a health department, social workers, whatever, okay? So I can choose internal or external, and then that means that we're going to take every hour that is charged to this project, and we are going to dig out the effective rate, either internal or external, for this job class, regardless of the person's step. Okay. I can also say, well, we have agreed with our grant, or with our federal agency, or with our, I don't know, we just agreed that this project will be billed at $100 an hour. So I can select that and set this to 100. And then our overtime will also be billed at 100, or maybe 150, I don't know, or maybe $50 an hour, doesn't matter. So this is going to say, again, override the rates that come in, remember, this does not affect costs. Your costs are your costs are your costs, period. And then this option is recompute the labor charges. That's probably a poor term. We're not recomputing the charges. The charges are the charges. And use the fringe and overhead rates from the division override rates tab. Okay, so there is a in the applied charges, there is a division with override rates. Okay, and so I can override the fringes. So if you're, you know, if you have a grant or a customer or whomever who says we do not accept your actual fringes, or we do not accept your percentage fringes that you figured out for employee Ayren, we're going to override that. We want, you know, we have a maximum. And so then you can say, okay, that's fine. We still want to know what it actually cost us. So we're going to put it in as real fringe amounts, but we are not going to, but when we bill you on your specific project, we are going to override your rates, your fringe rates. Okay. So I'm going to stick with none because that means just actuals. Okay. The rest of this, if you're dealing with trust funds, that's a trust fund in my world is basically where it's a prepayment. So that's where somebody, a developer usually comes in and says, I want you to do a bunch of inspections and surveying on my project and such. And you say, okay, you need to give us $5,000 or $10,000 like a retainer. And then what that means is that we will tie into a trust fund, which is an add-on piece, which if you have that terminology, or if you use that and you don't see it in your project ledger area, then let me know and we can talk about demoing that and getting it turned on. But what it does is then it only bills for money that's already there. And if money's not there, so it bills against the trust fund. And if money's not there, then it tells you there's not enough money there, and it withholds the billing, and it says you need to go get more money. And we have a couple clients that actually we create letters for them that say, hey, your project has run out of money and you need more you need to deposit more money. Most of our clients that do that, just they have their own form letter that they send, or they call the person or whatever. A FEMA project, so if it becomes a FEMA project, this has to do with using FEMA equipment rates. Okay, and so then we can set the equipment rate on the vehicle, or if you have a different rate for FEMA for a vehicle, then we will start using that FEMA rate as of the date it became a FEMA project on the time cards. This admin surcharge is basically exactly what it sounds like. It's saying, okay, there's all these charges to the project, but I have to do some billing, so I'm going to add 5% for the billing component, you know, for managing the project, not managing the project, but managing the billing of the project. Okay, if that's allowed, if you want to do it, you know, if you are already part of the employee's overhead, right? If you are in an admin position or an accounting position, and so your division is considered part of the overhead of the boots on the ground that are doing the work, well then, well, it's up to you, but you get where I'm going. It may not actually be appropriate to add an admin surcharge because all your costs and your labor costs and all that are already included in the overhead that's attached to the labor, and so it's fine. You can also use external admin surcharge rates. And they can get more complicated, and I believe that is here in the surcharge rates. Okay, so I've got this set to automatic, billing frequency monthly, and I put in that, and I'm just going to use actual charges. Where is my, oh, there it is. Okay. Feel free to ask questions in the chat and I will try to address them in line. Okay, so next I have to think about who am I billing, okay? So if I go to the details tab, now a simple way to do it is an AR client, okay? So this particular client, this particular WinCAMS client has lots of AR clients, looks like for other departments, okay? They may also have, yep, here's this, I actually know where this is. This is in Oregon, and this is the Sun River Homeowners Association, right? So Sun River is a really nice, large, very large home development near Bend, Oregon. And so they have a homeowners association, and the county that they're in does some work, probably some snow plowing, things like that, and then bills that homeowners association. Okay, so I can right click in my lookup and say I want to open the source program for AR client, or I can just double click here, because I don't want to use an existing AR client. I want to create an AR client, right? I've got a new grant that I'm going to set up billing for. So I'm going to just go ahead and do this. So I'm going to hit plus in the AR client, and I'm going to pick client number. I can't, oh, sorry. Oh, they only allow numbers in their clients. We can, by the way, any of our fields, we can allow numbers, letters, special characters. If you're stymied by that, it's because somebody made a decision long ago to only allow numbers or something like that. That's why this is. We can switch it to letters very easily, or symbols. So I'm gonna just do client number 99, and I'm gonna call it, webinar AR client. Okay. $99 webinar way. Okay. Oh, there's already a 99, darn it. So I will choose a different one. How about 999? Got it. Okay. So this is my AR client, right? And it's active. That's all I really need. And I'm going to go back to my project ledger now, and I'm going to select my AR client. I'm going to rebuild my AR clients, and I think it starts with 0 because it left filled for me. There's my webinar AR client at 99 webinar way, and I have a balance due of 0, of course. Okay, so if I'm putting in an AR client, then I don't care where they get the money from. They can get it from a jar buried in their backyard for all I care. But I do need to care and identify where the money is coming back to, right? So I'm going to pick a revenue account, and I'll just pick one called striping. Doesn't matter. Okay, so this is a budget revenue account where when the webinar client, when it gets billed, the invoice will have this revenue account on it. Okay. Now there are other things we can do. Here's where we identify the trust fund if we had a trust fund. There are other things we can play with here, but we don't really need to get too complicated. We can also bill another project if we want another project that is responsible for the cost of this project. Okay. So now where are we at here? So now what you'll see is if I go to the settings tab, it says current settings, create AR invoice, billing the accounts on the details tab. Okay, so it's telling me what it's planning to do. Now notice if I change it to manual and save, current settings are none. We're not going to do anything for you. This is just your own, you've turned this off for a period of time for your own personal reasons. You want to bill it by typing into a typewriter, that's fine, whatever you want to do. No problem. So right now it says create an AR invoice, okay? So now what I'm going to do is I'm going to copy this project, and I'm going to call it the new copy webinar AR4 or webinar for JV, okay? So now I've created a second project, and I'm going to bill an internal agency. I say journal, and I use the term JV. A lot of people use journal voucher. is their term. So basically, I'm trying to, so I've got this reimbursable project, and I'm going to say journal charges, and maybe I'll bill this one quarterly, okay? Okay, so now this one is still saying it's going to create an AR invoice because I copied this project, and so the AR client number is still here. Okay, so I'm going to clear the AR client number, and I don't, obviously there's no, if you're now, and I use internal agency. You do not, it does, I'm not telling you how to bill. If you want to bill your the sheriff's office or an internal agency with an AR invoice, that's totally fine. Okay, all we need, the only extra thing that we need for a journal is we need an expense account. So we need both the expense account and the revenue account. Okay, now this is kind of interesting. You'll notice here that when I go and do a lookup here, I'm looking at, I can drill into the entire string, right? I'm looking for, because these are my budgets, right? The revenue is coming back to my budget account, but the expense account is someone else's budget, right? So it's the sheriff, let's say. I pick on the sheriff a lot out of love. So I don't have a budget ledger for the sheriff's budget, but I do need to describe those budgets, and they need to be valid. So the actual elements, and you may have a different, this particular site has 3 elements in their budget, and you may have 6 or 7 or 2 or whatever you have, right? So these elements need to exist. So you'll notice if I go look up here, it's only looking up the org. So I'm going to say, okay, I'm going to bill juvenile detention. Okay. And then if I do the lookup again, now it's looking up the objects, and I'm going to bill, let's say, architect design, doesn't matter. Okay. And then if I do it again, it's looking up, I don't know what I'm doing here, sanding cinders. Okay. So you'll notice that even though this budget is not in my budget ledger, it's acceptable, and it turns blue, and it will let me save it, because all I'm trying to do is say, hey, when I print out a journal form or whatever whatever I do, I need to tell the sheriff's office what budget to bill, we're billing, and where to get the money, and presumably they've told me, but I don't need to have everybody else's budgets in my budget ledger. Okay. So, so now if I go back to the settings tab, I see, oops, why is it not, oh, because I didn't take out the client, sorry. So if I leave a client in there, then this expense account is meaningless, but I'm going to take out the client, go back to the settings tab. It now says create journals, billing the accounts on the details tab. So create a journal, taking money from this, charging that expense account and bringing the money back to this project, obviously, and this revenue account. Okay, so now I have one project called Webinar 4 JV and one project called Webinar 4 AR. All right. The next thing is people invariably start to get more complex. They say, well, this is a shared project or a joint project between two, it's paid for by 2 different agencies. You know, we've agreed to rebuild or earthquake proof a bridge between our county and another county, or share in the cost with or we have multiple grants that we're applying to this, right? And so that is where reimbursable splits come in. And I'm not gonna go too deep into reimbursable splits, but you can see here we have a grid, and you can just say, I want like one AR client to pay for, it's got a lot of those same things we saw in the details tab, the budget expenditure account, the budget revenue account, the build project, et cetera, and it's got a percentage. So if I wanted client A to pay 60%, and then I have another line for client B to pay 40%, it will do that. And it will even do this, we can even do a billing backup report that says, here's the original charge. There was $5,000 of charges, or we massage the numbers, whatever. And then you're responsible for 60%, you're responsible for 40%. So we can do all that for you. And then we can even get more complex that a few of our clients have, where they have a two-part grid where the upper part says, what is the nature of the charge, right? What division is the labor coming from? Who owns the equipment? What is the expense type, right? And then once you know the nature of the charge, then there's a lower grid that splits it according to that. So then we can say, you know, this charges from the surveyor division get billed in this sort of a split, and charges from the someone else get billed in this sort of a split. It doesn't, it's really easy to do. So this is and so this can be used to also to partially bill, right? So if I don't fill out the 100%, then of course I'm only going to partially bill this project, the charges for this project. This can also be used, I've seen this used, so if you have an invoice that or something that you normally break down 27 ways, well, maybe you don't want to break that down on every invoice. So what you could do is just charge a project and then bill that project to the breakdown, right? So then we will create a journal saying, well, you know, or an AR invoice if you so desire, saying, okay, this project has collected these invoices and now we're billing them 28 ways, right? So we can do that on the Reimbursable Splits tab. FEMA rate overrides for, I believe that's for equipment. Okay, so now we have set up our two projects. They're both automatic. We've got one that's monthly, one that's quarterly. This one actually was not checked combined because, and so then if I had two projects going to the same AR client or to the same, billing the same party in a journal, they would both be on the same journal, but it really doesn't matter because I don't have two projects set up. Okay, so here's my one project, here's my other project. Okay, so next on our agenda is entry of charges to the project. Remember, you do not have to do it in this order. Do not feel like, oh, I can't just get started with billing because it's too late. You can take an existing project and mark it reimbursable, and the charges are sitting there all of a sudden waiting to be billed, which happens very often, right? Because you have a project that you don't know you're going to get help with paying for it, right? And then you find out you're going to get help with paying for it, and you make it reimbursable. Okay, so let's go to our time cards and our invoices, and I will also do a material issue. How about some road materials? Okay, so we're just going to have to find somebody. I don't actually know who we're going to use here. Okay, so here is an invoice. Okay, I'm in the invoices. Doesn't really matter. I'm gonna make an invoice. I'm going to pick a Potter's Industries, and I'm working in 1920, so I'm going to use 03/01/20. Okay. So Potter's Industries, how about some ceramic pots? Okay, and I'm going to charge $100. Okay, and if you enter invoices, this is pretty basic to you, but if you don't, I've now got to go to the detail tab and explain how I'm breaking down that, how I'm distributing that $100. Okay, so I'm going to do 4 ceramic pots at $17, total $68. I am going to charge, so this is where I pay for them, right? I'm going to bill them later through the project, but this is my own where I pay for stuff. Okay, so I'm going to charge it to I have no idea. How about copy machine rental? I don't know, they probably don't have a ceramic pots budget. Okay, so and then the other thing I'm going to do is I'm going to enter a project. Okay, and what project am I going to enter? Well, you know which project I'm going to enter. I'm going to find webinar. Okay, so there's my webinar 4 project, billing an AR client. Let's try that one. Okay, and I'm going to select a project expense type, right? So where do I want it to hit the project expenses? I'm going to say it is materials. Okay, and let's see. We'll find out when we post whether these people need cost centers and some other things like that. So then I'm going to copy that line to line 2, and I'm going to buy one more fancy ceramic pot at $32, and I'm going to charge the same budget, but I'm going to charge this pot to the Webinar 4 JV project. Okay. Okay. And I'm going to approve it. I don't know if they need to print or interface. They do whatever their process is with invoices, right? Okay. So now I've got my invoice. On my time card, I'm going to create a time card. I'll also use March 1st. And I'll pick on somebody. How about Rodney? Okay, good. I didn't run into a time card that he already had. Okay, so his activity is going to be, how about maintaining a building? It really doesn't matter to me. And he's going to work all 8 hours on that. And he's going to, and I'm going to pick my project. So there's webinar 4. Oh, wait a minute, I'll do 6 hours to webinar 4 AR. Then I'm going to insert a copy of the current line, and I'm going to do 2 hours to webinar 4 JV. Okay, so we got $485 worth of labor. Remember, this is an applied labor rate. This could be this could be much higher than his wage rate. Okay, but that's what I'm going to do. Oh, and I'm also going to do some equipment usage. So I'm going to say equipment used. I'm going to use now I don't know which of their equipment has a rate, so I'm going to try to get that one. And it defaults the equipment units to 6 because it's measured in hours, right? So let's see what I get here. I get no equipment charge. Okay, so I'm going to double click in the equipment used, which will open the vehicle master. And take me to that vehicle. And the reason I'm doing this is because I need to set up a rate for this vehicle. You can set up rates in category or whatever, but it doesn't matter. What I'm trying to do is get accurate cost for what we're doing on this project. Okay, so we were on vehicle 5-241. It's active, and I'm going to go to the motor pool tab and the usage tab. Okay, so it has no rate, so I'm going to pick a this will be kind of interesting. I'm going to put in a $10 rate per usage unit, hour or whatever, for regular, and then for $15 rate for reimbursable. Now, I should, let's see here, why did I not get? The equipment usage rate normally should default to reimbursable if I'm referencing a reimbursable project, which I am. So let's see if we can get this to recalculate. No, come on. Give me the, So I am attempting to get this, there we go. So what I had to do was, because, so this time card thought it already knew about this vehicle, right? And it already knew about the rates. And so I went, while this time card was up, and I went and I changed the rates, and I wasn't seeing any equipment rate here, okay? So, or equipment charge here. So what I did was I did a refresh with this little circle. So then it had to start, get its cash tables again. Then I recalculated the time card. This is only really an issue if you're doing it all at once like this. I'm entering a time card and updating the equipment rates at the same time, which is not common. Okay, so now you'll see that I chose the reimbursable rate at 6 hours. We get, or 6 units, whatever, we get $90. If I was to choose the regular rate, it should change to $60, and it does, right? So that should be automated based on the project. Selecting the project will give us the right one, or you can change it. And you can also, of course, select this in your pay period time card with a right click, okay? And then I'll also do, I'm gonna do the same, what am I doing wrong here? The same vehicle on my second line, okay? But I'll do the regular rate. I don't know why, okay? So I get $20, because remember it was $10 per unit. So I've got this much labor, this much equipment, and they're going to the 2 different projects. That's great. Okay, and let me make a note here. It is employee 1344. And my invoice is invoice test. And now my last thing I want to do is some materials issues, okay? So I'll also put that on the same day just for ease of finding it and such. And I will call it division 35, requisition number test. And then I'm going to look up a, how about liquid anti-ice? We got 10,700 on hand. The unit cost is 93 cents. I'm going to issue 500 of that, and I'm going to pick my project. Great. Then I'm going to copy that line, and I'm going to do 200 to my other project. Super. Okay. So next, so I've got a time card. I've got an AP invoice, and a material issue. My next is post the charges to the project. We're still in the world of costs right now. And actually, I just noticed that I mentioned overhead. They apparently, this activity has a 0 overhead rate. So if I double click in this activity, so this is going to be that division 42, activity 41 has a 0 overhead rate. Okay. Now, if it had an overhead rate, then and I don't know why, but that's fine. I don't care. There would be an overhead charge here. And the reason I bring that up is because remember that if you choose to massage the billing labor rates, then we will normally suppress the overhead and set it to 0. Okay. So if I had an overhead rate, that is a valid piece of the charges to that project, but it may be suppressed when we go and bill. Okay, so the next thing I'm gonna do is start to post. Okay, so my posting, I'm gonna post time cards. And this would happen during your normal course of things. I'm gonna post a specific time card. It really doesn't matter. But just to keep things simple, and I'm going to hope that I set it up right. Okay, so I'm going to select, and on my employee is 1344. So I'm doing include employee 1344 only. Normally people don't do this, but I don't need any other ones. It's warning me that there is no date range or pay period selected. So it's not true that all unposted time cards will be collected. It's just saying if you don't select a date range, that means that time cards that were entered 5 minutes ago or 5 seconds ago could theoretically be picked up. Okay, I got 2 time cards, which is exactly what I wanted because I had 2 lines on Rodney's time card, and I can see that it's going to post equipment usage 2. It's going to post 4 charges to projects. The reason there's 4 is because there's an equipment charge for each project and there's a labor charge for each project. Okay, and that's all it's going to do. And this, if you use cost centers, you would have cost centers. It's nice that I picked a county that doesn't use cost centers, so I don't have to worry about that I have those set up. Okay, so I write my audit trails. This is really doesn't have much to do with billing, but if you do posting, you should be familiar with this. Okay, I say, okay, look, it's posting to webinar 4AR, these labor charges, these equipment charges, and to webinar 4 JV, these labor charges, these equipment charges. It's exactly what I wanted, right? It's also posting to usage hours and usage amounts to the vehicle, so we can track how much they get used. And that is usage in our world is different than odometers, right? So there might be an hour meter on this vehicle that says it was used for, or it was idling or whatever, and it was used for 10 hours that day, but we only captured 8 of the usage miles or hours on the time card. Okay, and so that goes to the that post to the vehicle master. So I like what I see. I've got no invalid records. Remember that invalid records means we will not post that record, period. So if it says invalid, then that record is going to get left behind if you hit post. Warnings say, I want you to know about something, but I will post the record. Okay, and there's a video on posting in our on our website and on our YouTube channel, the WinCAMS channel, and I'll probably do a webinar on posting in general sooner or later. So I say, yep, I'll post valid records. Okay, batch 16157 was posted. Okay, great. All right, so next posting I want to do is invoices. Okay, so I go to post AP invoices. I wrote down that my invoice number is test. That's easy enough. Now, time cards always post to the correct counting period, correct pay period, because it's based on the date of the time card, the date that you put on the time card. Invoices post to an accounting month, right? And and so this particular, I mean, I could have old data, but their accounting month is July. So if I set it to, my invoice was dated March, so I wanted to post this to March. Normally, you shouldn't have to do this if you're running your month-end procedure in a timely fashion. It should already say March because the current accounting month should be March up here. But apparently, I'm a little bit behind. So I'm going to pick an invoice number. I could look it up, but I know it's called test. Case should not matter. So it found one invoice, exactly as I expected. It's going to post 2 charges to budget expenditures. That's for the 2 lines on the invoice. It's going to post 2 charges to projects. That's for the 2 lines on the invoice. And there was nothing else. If you have cost centers, you'll also see a couple cost centers in there. So I write my audit trails, set them to detail. This says what I'm going to post, what I'm about to post. Okay, I'm going to post. Remember, I put both charges to the same budget. So it's going all to copy machine rental. Makes no sense, but copy machine rental is paying for our ceramic pots. And here we have a $68 material charge to the Webinar 4 AR and a $32 material charge to Webinar 4 JV. Why is it under material charges? Because in the invoice, I selected project expenditure type material, right? So I could have charged it to overhead or equipment or something else, right? So equipment, I might charge it to equipment if this bill was for a project, was from like a equipment rental company. So if you don't own the equipment that you need and you go rent some heavy equipment or a ditch digger or something like that, you could say when this posts to the project, I don't want it to go to material, I want it to go to the equipment costs on this project. You could do that. All right, post AP invoices, I like what I see. I have no warnings or invalid records. I've reviewed my audit trails. If you want to save them, you can. I don't, because I can get all that information back, or I can get all that information later. I can't get posting audit trails later, but all the information I need is in the invoice, and there's going to be, now it's going to post to the project and the budget as well. So I hit post, batch number 16158 has been posted. And then my third posting I want to do, it's going to be under applied charges, post material charges. Note that post time card materials is right above it. It's also, many of our clients enter the material usage on the materials tab of their time card, right? Or the right click materials in your pay period time card. In daily time cards, there's a materials tab. So I could have put these on the materials tab, but then it would have posted to create the issue, and then I would have needed to post again to charge the project. So either way, I got to get the charges to the projects. So I'm going to go to posting, applied charges, post material charges. So this is going to pick up issues, and it's going to charge them to whatever. Now, if you're in, if you are a site that posts applied charges directly to your budgets, i.e. Washington, then it will, you'll see it posting to budgets. And if you're a site that doesn't, then you won't see it posting to budget. So again, I want to choose March. I'd rather have my current accounting month be March, like, you know, marching through the months, no pun intended. I'm going to collect my records to post. I get 2 records for my 2 issues. 2 are going to projects, and it counts up the material charges for some odd reason. I can't remember why. I think it has to do with charges that we need to mark posted even if they don't go anywhere. Okay, so post to material charges to projects. Here's our Webinar 4 AR, material charges of 466, material charges to the JV one of 186. Okay, I like what I see. Post valid records. All right. So now what have we done? Let's go back to our project ledger. Okay. On the financial tab, let's see here. I want to see what's going on here. There we go. So I was sitting on the project. I had to refresh it. So we posted $363 worth of labor to this project, and $534 worth of materials, and $90 worth of equipment. And on our JV project, we have these a little bit lower numbers, but also numbers. Nicole. Your accounting month never changes and it's always July. So that's what I'm saying. Your accounting month is not going to change automatically. To get your accounting month to change, what that is reflecting, accounting month July is reflecting file, system, control file, and your control file shows the current accounting month, okay? You could unlock this and change it here, but that's not what I recommend. What you want to go to is file, system, month end. Okay, and month end is not as complicated as year end. It's very fast. I'll do it right now. Okay, it's you basically always do all of them. We pre-select all your modules for you, and you say clear my month to date values. So you'll notice, let's see, does Project Ledger have it? Current period. See my current period values here? They're also in the current year, but they're in the current period, right? So if I want to do a month end, it's very easy. I just go in here and I say clear my month to date values, and all that's doing is literally zeroing out those values. The detail records for those charges are still there, but I'm clearing out in the masters, I'm clearing out my month to date values. You see how fast it goes. I'm done. It says, do you want me to set the new accounting month? Yes. Now I'm at August. Motor pool doesn't matter in this case. Okay, so now I'm at August. I don't actually think that this changes in where you're sitting, but as soon as I log out and log back in, it will change to August. That really should change. But now if I go into a posting, so if I go back into, or remember, labor doesn't use it, but if I go back into post AP invoices, the post 2 month is now August. So that's your answer, Nicole. It has nothing to do with the actual month in the real calendar in the real world. It's completely based on what month are you working in. So the idea is we are processing July, and then, I mean, in an ideal world, August 1st, we're all done with July. We've processed all the time cards, etc. We've done everything we need to do, and we are now, we've incremented the accounting month. And so then we increment it to August. In reality, it might be August 15th. It might be, I don't know, it doesn't matter. But it really should be, you have a list of posting programs that you run each period. You post your invoices, you post your materials, you post your time cards, etc. And so once that is done, then your current accounting month where you're working can bump forward. Okay, so we're back to our project ledger. If I do this, you will see that now my current period says 0 because I just cleared out the current period. This is just a dumb bucket of costs. It's not actually saying that we got rid of any charges or anything like that. The project details are here. As you can see, here's my expenditures, right? The details are here. They're not going away. They will never go away. They can't go away. It's not possible to even delete them other than through the back end. But this little counter is gone. And some people get confused because they think that we post into the current period, and then when you do month end, it moves it into the year to date. That's not true. We hit current period and year to date at the same time. If you're talking about vehicles, we hit month to date, year to date, and life to date at the same time. So clearing the month to date has no effect on the year to date or life to date. Also notice that I didn't set up any budgets for my budget appropriations for my project, which is fine, but I could do that. I could set up an appropriation current year for labor. I expect to spend $1,000. And then my financial tab starts to look a little cleaner, right? So I expect to spend $1,000. So I spent 121. I've got a budget total of $1,000. My expenditures total so far is $360.02, and now I've got an unexpended balance of $639. Okay, and then I've got no revenues yet, so my revenue minus expenditures is negative $360. Okay, and I could have shown you that there was a pending amount. So before I posted those charges, there were pending, they were shown in the pending here, but they cannot be billed from pending. They cannot be reported on in a project report. You can report on them in a source document report, like a time card report, but you can't, they're only in the pending at that point. Now I've got zero pending because all of my charges have been posted and it's actually hit the real financials. Okay, so hopefully you're with me and I'm going the right speed. So we've gotten through number 2, entry of the charges to the project. And by the way, I'll send you this outline. The attendees, I'll send the outline to them. It'll also, of course, be shown in the video. So next we are going to bill. This is where the rubber hits the road, or whatever meets the road. Okay, so remember that in our reimbursable settings, we have one that is going to JVs, journals, and one that is going to an AR client, or an AR invoice. And that AR one is, I set its billing frequency to monthly, and the JV one, I set my billing frequency to quarterly. Chrissy has a question. If you are collecting deposits, would you put that amount in as your budget amount? If you are collecting deposits, I would put that in as revenue. And if you're not using trust funds, I would put that in as revenue to the budget. So then it's basically, or I'm sorry, to the project. So you can put in a journal that says, okay, here's revenue to the project. You put it on the to side of the journal. It will go into the revenues here, and you can even describe it as the deposit. And then your financial tab will show the expenditures, and then your, when you've used up that deposit, you can do that here. Now, some people collect deposits in such a way that they say, well, I don't want it to it really only applies at the end of the project or something. So then you would really need to sequester that deposit. And in that case, I don't have a great solution for that deposit to not apply it to your expenditures here. And so I would just put it in as a note or something like that says what your deposit is on file. And the other thing is, we do not, unless you're using a trust fund, which would be great, then we're going to bill this, just because if I put in, if I pre-entered revenue of $500 so that my revenue minus expenditures is now $140, so I'm in the black, right? Well, we still want to bill this $360, right? So you have to be careful of that too. If it's literally a prepayment, then that's fine, but then you who are you billing, right? So if it's an AR client, you could put in a prepayment for that AR client, and when we do, I think our next webinar or the one after is about AR, we'll talk about prepayments and how once you've got a prepayment of $500, then a $360 bill comes in, an invoice comes in, and then we can link those two up, right? So it's like backwards AR. Instead of billing them $360 and then they pay $360, they pay $500 and then you bill them $360 and we link it up. Okay, so the next step is billing and reimbursables. So I'm going to go to the posting, projects, post billing, reimbursables. Okay, so a really important thing to understand whenever you're doing a posting program is, what is the source of this posting program? So with post time cards, it's pretty obvious, it's time cards. With post invoices, the source is invoices. With project reimbursable billing, the source is the charges that have hit the project. So if we go to this detail right here, it's these charges that have hit the project. So you cannot bill through our billing a charge that has not yet hit the project. You can't bill a time card that has not yet been posted to the project. You can't bill an invoice that has not yet been posted to the project. Okay, you have to post it to the project for it to bill. And you can't bill the same charge twice, right? We're going to mark those charges, these transactions, expenditures. So here's our 4 transactions: labor, equipment, and 2 materials, right? 1 from an invoice and 1 from inventory issue. So these charges are not yet billed, right? They have no billed amount. Okay, so once they get billed, I'm sorry, not reconciled. Once they get billed, then we will not bill them again. Okay. All right, so in my project reimbursable billing, now there's no actual need for you to select anything at all, because we won't bill the same charge twice. And of course, we will only bill things that are set up for billing. We will only bill reimbursable projects that are checked automatic, et cetera, et cetera, et cetera, and have charges that are ready to bill. So you can just hit collect records to post, right? I'm going to select I'm actually going to select on billing frequency, right? So I'm going to go billing frequency. Why don't I have a lookup for that? Darn it. I must have something set up wrong. So let's see if this works. Monthly, try that. And then I've got a bunch of checkboxes here. So for services rendered, it defaults to my current month, and it defaults to my current month. So I'm going to say March 2020, because that's actually when I'm doing this billing for. And then I've got all these options. You know, do I want to prepare for a project cost source report? That's oftentimes my backup. If you don't need any backup, then great. If you can just bill people $500 and they just pay it, then great. If you don't, but a lot of people want backup, so they say, well, I want to know who was working and when and etc. Right? Include admin surcharge amounts, combined labor and overhead billing lines, so you kind of hide your overhead as labor. What you want to apply any admin surcharge. I didn't put in an admin surcharge, so that's fine. And what date you want your invoices and journals to be. So I'm going to make them today, and I'm going to post to March. And let's see if I can pick up anything. I cannot pick up anything. So my billing frequency, I'm going to need to figure out what that billing frequency is. Let's try this, or why that lookup isn't showing me what I want. So I'm going to just pick my projects. Remember, I don't really need to pick anything, because it's only going to pick up, if I've got my settings dialed in, it's only going to pick up things for reimbursable projects, and only charges for reimbursable projects that are not yet billed. So I'm going to pick my 2 projects and see what I can get here. There we go. Okay, so it wants to create 4 AR invoices, and then it's got 4 invalid, and it actually wants to create 4 lines on an AR invoice, I think. It's got 4 invalid records. I suspect I didn't set something up right. Okay, so I can still post, and it will only post the things that it likes, because these invalid records will not post. So let's go take a look at what they are. Okay, this particular one, it wants to find a valid budget, which is exactly the opposite of what I said it would do. I think there's a setting in the in the billing that sometimes for some people they do want to validate the entire budget. Okay. So Miriam asked a good question. When do you create billable charges? So for people that use trust funds, they do a two-part billing. It should work mostly the same, but they have different. And we'll probably do a webinar on trust funds. They have different options in here that say create billable charges and create billed charges. And what that does is it's post-billing reimbursables is analogous to create billable charges. And then you create the billable charges. And then when you create billed charges, it creates the AR invoices, it creates the journals, and if necessary, and it checks against the trust fund, and it says, is there enough money in the trust fund for us to bill? But most people don't use trust funds, and so they just bill directly. They don't need a two-step process. Okay, so it didn't like my budget here that I put into my JV area here. It didn't like this budget, so I'm going to go find an actual budget that exists, because this particular client is set up. Now, if you don't want that, that's fine. I'm going to look into what triggers that, but this particular client is set up that they need the budget to exist. So I'm going to put in a real budget that does exist. Okay, and then I'm going to go back and I'm going to collect for billing again. Okay, so I got rid of my errors. What did I do? I saw that it said, I don't like posting to an expenditure budget that does not exist. And remember, I was able to put that in because I was looking up element by element. So I need to figure out why those two things aren't matched up. Correct, Miriam. You do not. If you do not use trust funds, then we normally want to switch you back to the standard billing, standard project reimbursable billing. Billable charges and billed charges are only used so that we can say, okay, these charges are ready to bill, but we are not going to bill them because there's not enough money available and we need to go ask for more money. So, okay, so I found 8 charges. Let's go take a look at what they are. Okay, so we've got create journals from project reimbursables. So you'll notice here what it's doing. It's saying, okay, it's a combined journal, right? It means it can be combined. It actually isn't going to be combined, but it can be combined because I didn't choose single journal, and it's breaking it down by org, right? So who we're charging, right? So the charge is going to, oh, I'm sorry, breaking it down by who it's coming back to. So that's road, okay? And then here's the project number. So there might be multiple project numbers. And then we've got 4 charges to this project. And it's saying, here's the source total and the percentage, right? Because I could have done a reimbursable split, but I didn't. So it's 100%. And it wants to say, it's going to put that from amount in there. It's going to say, get that. It's going to do that. Okay. And it's saying it's going from this account to this account. Okay, so that corresponds to corresponds to these. So it's going to this account, coming out of that account. Okay. Miriam says the revenue from the journal should not show in the project. The revenue from the journal will post back to the project because that because a journal does, you don't have to wait for it to get paid. If you want to wait and run AR, then you should be posting to AR. When the journal posts, it's going to post back to this project, and hopefully I'll get to that shortly. Okay, what else are we doing in this audit trail? Create AR invoices. Okay, so here's our combined invoice for our webinar AR client we set up, and we've got some labor, some equipment, and materials. Okay, and again, we've got percentages of 100%. And then this is a unique posting. It is capable of running a cost source report, right? So this runs a cost source report that shows exactly the charges, the details of the charges that we are billing for. So this can be your backup if you don't want to go try to run a project report on your own that has the exact same details, right? So this says, here's what happened in webinar 4 AR, right? Road inventory, labor, Rodney, vendor, here's the invoice data, detailed data, okay? So it prints it right there for you, and you can review that. So I like what I see. I want to post valid records, and it says, now the final audit trails are in this. I don't really know why we do this, but we say that it will be printed. We used to always print it. Now we can preview it at least, okay? And it says, oh, and by the way, when we did our audit trails, you'll notice in the AR invoice and journal audit trails, we have estimated numbers, right? We're saying we don't know what you're gonna do, but we believe that looking at the counter, we're gonna create invoice 4051, and we're gonna create journal, and this can be customized, but this is a journal saying their journal is based on who the money's coming back to, and then a sequence number. Okay, so that's how the journal number goes. Okay, so we post valid records. I'll do summary on both, and I want to take it to the preview screen. Okay, so we posted valid records. It says I created this journal number, and this now doesn't say estimated journal number, it's an actual journal number. And this says I created this. Oh, it doesn't show me the AR invoice number for some reason. I don't know why. Okay, so now, what does that mean? Okay, so a few things have happened, right? Let's go back to our project ledger in our transactions. See if we can get this. Okay, so I got this to refresh. Now, all these transactions have this billed amount, right? They could be partially billed, and they tell us what the journal number is that we billed to. And if we go to our AR, we have the billed amount here, and it tells us the invoice number that it billed to. Okay, so all it did, this didn't go reach out and talk to your clients or do anything. All it did was go and create, and it also, by the way, it hasn't updated the AR client yet, right? So the client still has no charges, but look, there's a webinar 4 AR charges right here, and invoices out there, an open invoice. So at this point, I can go look at those charges. I can go into journals. And AR invoices. And Miriam, to your question, an AR invoice will not hit the project. You are right. It will show as billed, but it will not hit the project when it posts if you're on cash basis. And I think we only have one client that's not on cash basis. If you are, but when the payment comes in, then the payment will pull in the project from the invoice, and when it posts, it will hit the project with revenue. Journals, on the other hand, there's no like, did the journal get paid or not? The journal is just, the journal's paid. When you post the journal, we assume it's paid. It's a done deal. So that journal will hit the revenue in the project. Okay, so here's our, no, that's not our invoice. I remember it was, okay, 4051 webinar for AR charges. So it created a $988 invoice referencing this project, saying this is where the revenue comes back to. It's broken down into a couple different things, right? And so now I could print an invoice, you know, I don't know which, I don't even know if we have an invoice set up for these guys. But this is where we get into, in my outline, AR invoices and journals and notifying the billed parties, right? So this is where we have to step out into the real world and say, let's see here. That's fine, sure. So this, you know, if you're doing this already, great. If you need this form customized, let us know. So we can put your county seal up here. We can make it, you know, make sure that everything looks tidy, and then people would maybe send this invoice out for $988, and or they'd print it to a PDF and send it, or we've been working on partnerships with billing agencies like Point and Pay, or I can't remember what the other one's called, where where we send them a file saying this client owes this much, and then that allows then they do the billing for you, and then the client can do paperless payments, and they can accept credit card payments and things, and then they just send us back the amount that got paid, and we can update the client. So you notify your client however you do that, right? And then you post this invoice, right? And that invoice would then post to the AR client, and then it's now a billed charge. It's a charge that has been billed from that project, and when the payment comes in, and I reference this client, webinar AR client, they send a payment of any sort, I put in the payment, and then I select this invoice number and these, you know, these lines or whatever, and then the payment will reference that project, and when it posts, it will post the revenues back to the project. Okay, so I would maybe send that invoice form that I just showed you, and also a project cost source report or a project expenditure detail. Some people send a time card distribution report because they want all the details of that. But the nice thing about the project cost source report is that it can show the charges with in a let's see here. Well, my project cost source report must have gone to the printer, but it can show the charges in the massaged way, right? So whatever your labor rate is set to, it will modify those charges, right? So if I had a project here that if my project had been set to use a different labor rate, then it would have thrown out that $363 of labor, right? And it would have changed it to some round number like $400 or whatever. Okay. So that's the most common one to use is the project cost source report, and it will run it automatically from the billing, or you can go in and do it yourself. So it's got billing backup mode that says, do you want to see these costs as the actuals, like a literal cost source, or do you want to change it to like an external mode where we will massage the rates to whatever we want to do here? So if I select my projects, so I'm going to select my two projects. Okay, so this is a very detailed report, and as you can see, it says for my Webinar 4 project for billing AR for March, I've got equipment, and it literally says Rodney used this Freightliner for 6 units at a $15 rate, right? And all that stuff. Okay, now if I switch my project to say, use an override billing rate of, let's say, $100 an hour, and let's just see if it will do its thing. Which project did I switch? I switched the Webinar 4 AR. Okay, so it doesn't know about it yet. Let's see if we can get it to refresh itself. Okay, so project Webinar 4 AR. Okay, so here, I'm gonna run it. Oh, I didn't check the box. That's why I didn't show it. Sorry, I missed that. Okay, so if I run it just as is with actual costs, I get the applied labor rate, right? I get 6 hours at $60.66, which is the applied labor rate. And apparently I'm off the screen for my amount. But if I do this, then if all goes well, it changes the labor rate to $100, which is exactly what it would have done in the billing as well, right? So we need to, when we have these massage numbers, we need them to be able to report for your backup as well, and show you that and show to your customer, Rodney worked and it was $100 an hour, and that's why you're getting charged $100 an hour, and so on and so forth. Okay, so that's your billing backup. And if we go into the journals, here's our Webinar 4 journal charges for services rendered March 2020, $360. Remember, I said that it's going to come from road CIP bridge construction just because I wanted to pick one. And the reference project is where it came from. You'll notice that the project is blank because we don't want to have a circular charge. You'll also notice that the reimbursable checkbox is checked. That is not something a user can check or uncheck, because that tells WinCAMS that we created this journal. So there's a few things that we do in posting that are slightly different, that we know that this came from our own journal process. And the to side is bringing the money back to road striping, which is a dumb one, nonsense one that I chose. But you'll notice that on the to side, it does have the project. Okay, and so that revenue should go to that project. So now if I approve it, and maybe they print their form or whatever, and then I can go to, let me close project reimbursable billing and go to, I'm gonna go to direct charges. I'm gonna post journals. And my journal number is this one here. Or I could pick 8/18/20 would work, because that's the date I told it to use in the posting. And I'll post to March. Journal date 8/18/20. Now I'm only selecting because I don't know what else is out there in this database. You would only have the one. It's going to hit budget expenditure, a budget revenue, and a reimbursable project, right? So I don't need to write my audit trails. I'm just going to post because I'm running out of time. And now when I go to the project, so this is to Miriam's question, what, cash basis, accrual basis, etc. You'll see that the revenue total, let's see here. I need to go to my webinar for JV. There. So my JV project has now received $360 of revenue because the journal got posted. Because in our world, a posted journal is paid. I mean, there's not, we don't track payments against journals. And hope if you have a question about whether it's going to be paid, it really should be an AR invoice instead, so that we can age it and all that stuff. So now we see that we have 360.02. Our revenue total is exactly 360.02, and our net is 0. If we had gone to $100, that setting, if we billed it at $100 of labor, then we could have seen the labor, instead of being 121, I think it's 2 hours, so it would have been $200. So then our revenue total would be higher than this, and then our revenue minus expenditure total would be positive. And if you want to see that revenue, it's right there. So our journal, webinar 4 journal charges came in. This is the source journal. Here's the revenue amount. So in this case, we just billed at actuals. So our we had $360 worth of charges this month, and we recouped $360 worth of charges. Okay, now I can't do the same thing with the AR invoice, because when the AR invoice posts, it does not show, it's not going to hit the project yet, because that is true. We're normally on a cash basis. If you are accrual basis, which I think is only one client that I know of, then the invoice will post revenue to the project. But if you're on a cash basis, then we wait for the payment to realize the actual revenue. Let's see here. Is that, yeah. Okay, so I think that is everything. This was the time I wanted to end. And if you have any further questions or want to reach out to me about anything at all regarding WinCAMS, you're welcome to do so. Our next webinar is scheduled for 2 weeks from now, I believe. Nope, actually it's scheduled for next week, and it's an open-ended webinar on the 25th of August at 10 a.m. It's called Ask Ayren Anything. So it's basically for, you could, if you sign up for it on our website, I'll send out you can send in emails, and you can ask your questions. We can talk about any area of CAMS, hopefully quick answers in 5 minutes or less, and we can talk about any module, any, I'm not really looking for your particular, I have this one time card that did this weird thing, because that's hard to answer, but there are no stupid questions, and we can, just, can you tell me how this works, or can you tell me what this checkbox does, etc., etc. Okay, thanks for attending, and when I will upload this to our YouTube channel and to our website, feel free to email me if you have any questions. Have a great afternoon, everybody.